Greetings to you all accountants. This is another presentation by Mr. Sir Jef, presenting on accounting ratios, and today we are moving on to another aspect. We covered on profitability ratio, and this time around we are covering on liquidity ratios. Okay, understanding our focus is understanding liquidity ratios, and then we want to measure how far we could have moved, but then so we are going to start with the C to B state for liquidity ratios, then compute the liquidity ratios. Then you need to comment on the liquidity of a business using these liquidity ratios. Okay, our key term there is current ratio, asset test ratio, inventory turnover days, inventory turnover days. Then we've got our trade payable turnover. Okay, so that's what we are going to do. I hope you have understood our focus as we progress. Okay, so let's kickstart. Those who are coming across my video for the first time, I think you can contact me on the numbers that are appearing on your screen. Say Jeff as your accounting tutor. Okay, so today we are doing what? Liquidity ratios. What is liquidity? I want you to take down this definition. Liquidity is the measure of the ability of a business to pay its short-term liabilities. Is the measure of a business ability to pay or meet its short-term liabilities or short-term obligations. Okay, so on liquidity, I said, what is it? It is the ability of the business to meet its short-term what? Obligation, to meet its short-term obligation. So I think that is very clear to everybody, and I think you can get that. The ability of a business to pay its short-term obligations. Remember, we are saying we've got our obligation. Let's say we've got our current liabilities. Let's say they are equivalent to how much? 10,000 in this case, our current liabilities, and our current assets. Let's say our current assets in this case is equivalent to how much? $2,000. Okay. When we're talking of liquidity, we are saying what is the ability of the business to pay its short-term obligation. Our short-term obligations are the current what? The current liabilities. So the current liability become our short-term obligation. So we can say we have got 2,000 to pay 10,000. You can see that our ability to meet our short-term obligation in this case is limited. So we are suffering somehow from liquidity challenges. Okay, so I think that is very clear to you. Let's proceed as we move on to understand more on this liquidity. Okay, so let's also move on to an aspect which I want you to understand about. Let's say the ratios. Okay, we need to understand the ratios. We need to understand the ratios. It's very important to understand the ratios. So what you need to do, you need to learn these ratios by heart. When you learn the ratios by heart, then it is easy for you, and you can easily understand. We can easily understand this, and you are good to go. Okay, let's start with the first ratio that we have in this case. Our first ratio that we have in this case is the current ratio. Current ratio in this case, how do you calculate current ratio? Current ratio is equal to current assets over current liabilities. Our current assets over our current what? Liabilities. Our current assets over our current liabilities. I think this is very clear to everyone. We can clearly say that this one is very clear. Current assets over current liabilities, and we also know this is also known as the working capital ratio. Okay, then we've got we need to move on to another aspect which we call the liquid ratio, or the asset test ratio, or the litmus. Sometimes it's called the litmus test ratio. Okay, our litmus okay, our litmus test. Okay, the litmus test ratio is our current assets minus our closing inventory, then we divide by current liability. So it's almost the same. It's just the same as the ratio above. Okay, but what we do here in this case, we want to calculate excluding what? The inventory. So these are the total assets, total current assets minus the inventory divided by current liabilities. This is also known as the quick ratio. The litmus test ratio is also known as the liquidity ratio, and also it's also known as the acid test ratio. Okay, I think that is very clear. We move on to another ratio which you need also to learn by heart. This is the rate of inventory turnover. Rate of inventory turnover is equal to cost of goods sold. I think you know how to calculate cost of goods sold. I think we did this one. Those who are following my videos, we are saying our opening inventory. We add our what? Our purchases. Okay, our purchases in this case. Then we add our if we've got carriage inwards, add our carriage inwards. We deduct our stock, our closing what? Stock. Then we get our what? We get our cost of sales. Then average stock, I think there's need also for me to give you another formula. Average stock, we agreed that average stock is equal to what? Average stock, let me just write on this one, average stock. Okay, average stock. In this case, you need to know that is our average stock. We say what? Our opening stock, or this is our opening inventory plus our closing what? Inventory. We divide this one by 2. Okay, so our average, we will divide the stocks by 2. Then let's move on to trade receivable. And remember, these receivables, they are what? Our debtors. Okay, we used to call them our debtors. What are debtors? These are credit customers. We call them credit what? Credit customers. Okay, so those who buy goods from us in credit, we call them debtors and are now called receivable. So receivable turnover is the trade receivables over credit sales times 365. The answer is given always in days. Okay, then the last one that we need to do is the trade payable turnover, which we say trade payables over credit purchases. Remember, it's credit purchases. Here it's also credit sales. Okay, then the answer is given in what? In days. We multiply by 365. So far, I think these are the formula that you are supposed to learn by heart, and you need also to use them to comment on the liquidity of your business or the business that will be given in an examination condition. So what you do in an exam, you are supposed to state the formula, you show the working, you give us the answer. State the formula, show the working, give us the answer. Okay, that's the procedure. So we need to move on to another aspect that I have given you. This is a question that I want you to attempt. Okay, this is the question that I want you to attempt, and I think you can actually see that these are the dollars. Okay, so let me just put a dollar sign for other people to know this. Okay, so we are saying we have got our credit purchases 900, then this is what? 1,000, then this is 100, this is 300, our opening inventory. Okay, so they are saying you need to comment on the liquidity of the firm in the 2 years. So we are supposed to prepare a template. Okay, let me show you the template that will help you to present your answer. Remember, in accounting, we need things that are very systematic. Okay, what are you supposed to do? You are supposed to state the formula. Okay, on the first column, you state the formula. What is this formula for current ratio? Okay, current ratio, we agreed it's current what? Total current assets. Okay, total current assets over our current what? Current liabilities. Then you need to show the working. You pick your total current assets in this question. Okay, I'll show you our current assets. You can see that in 2019 it's 1,000. So you can actually see this is 1,000 divided by current liabilities. I think you can see 1,000 over 3,000. I think you can see that. You can actually indicate our working. Okay, you can indicate the working. Okay, so we are using the working from let's say this is 2 years, so let's just leave space for the other year. Okay, all right, then we indicate that we are saying 3,000 over, I think that's 3,000, right? 3,000 with 1,000 over 3,000. Okay, so I want you to write 1,000 over 3,000. So you write 1,000. Okay, 1,000 over 3,000. Okay, then the ratio would be 1. Okay, the ratio in this case will be equal to 1:3. Okay, so it means our ratio in this case, so you can actually write the working here so that it cannot disturb the other formulas. Okay, 1,000 over what? 1,000 over 3,000. 1,000 over 3,000, the ratio will be 1:3. I want you to do the same again for the year 2000 and what? Year 2020. You get 2020. Let's see our current assets. Our current assets are 5,000 and 1,000. Okay, 5,000 and 1,000, 5,000 and 1,000. Okay, I want you to show the working 5,000. So that's how I want you to do it. Okay, 5,000 and 1,000. Okay, this is 5,000. Okay, 5,000 over 1,000. Okay, so we reduce our formula, then it becomes okay, our formula becomes 5:1. Okay, 5:1. Okay, but this one always we need to make sure the denominator is equal to 1. Okay, so on this one I think we need to correct this one. It cannot be this one. The denominator has to be 1. Okay, so let's make it this one. We say 1 over 1,000. Okay, 1 over 1,000. We need to make sure that the denominator is always what? 1,000. So it's always 1. Okay, so this one 1:3. We divide 3 into what? We divide 3 into that. Let's see what you can get. I'm giving you a second to do that, to simplify so that the denominator is always a what? I think you did that one. I was checking on my calculator. We want to make sure that the denominator is always what? A 1. So what we do is you divide this one. Okay, let me show you what you need to do. Okay. Get my pen, just hold a little bit. So we are saying we divide this one. We say 3 into, we have got 3,000 into 1,000. We get, I think our answer will be equal to 0, what? I got 0.33. Okay, 0.33 S to 1. Okay, the ratio should be 1. The denominator, make sure that the ratio denominator is always 1. So this one also we need to correct this one. It must be given in that form, which is what? 0.33 S to 1. That is on this one. Okay, it's allowed to cancel an account, but you need to do it in a nice way. Okay, let's move on to asset test ratio. On asset test ratio, it's very simple. You state the formula. It's equal to current, write in full please, current assets minus our stock, and our stock is the closing stock. We divide it by current what? Liability. So we do the formula again. What is our total current assets? In this case, you can actually see that it's 1,000. Okay, minus our stock. Okay, we need to visit our stock, but before we visit our stock, we know that that our current liabilities didn't change. It's still 3,000. We still divide by 1,000. And this one, we know that our current assets didn't change. We say 5,000. Okay, our 5,000 minus our stock, we divide by current liabilities. In this case, is 1,000. Okay, let's check the stock figures so that we can complete the answer. Okay, we need to check the stock figures so that we can complete the answer. The closing inventory figures. Okay, we need to deduct. Okay, on our closing inventory figures. Okay, let me slide back. Our closing inventory is 200 and 400. Okay, 200 and 400. Okay, we are going to deduct 200 and we deduct 400. Okay, 200 in this case, 200 minus 200. We deduct what? 400. Okay, so that's what you need to be very particular on that. Then our ratio in this case, we agree that it must be the denominator must be equal to 1. So we are going to say 1,000 minus 200. Then the answer we divide by 300 by 3,000. Okay, by 3,000. So our asset test ratio is equal to 1:2. Okay, it's equal to, let me write the answer. Let me check the answer again. 0.27. 0.27. So our answer in this case would be equal to 0.27 is to 1. Okay. Then the other answer for the last part, we work this one again. We're going to say 5,000 minus 400. Then you divide the answer by 1,000. Then the answer is equal to 4.6. Okay, we get 4.6. So the answer will be equal to 4.6. Okay, is to 1. That's how you do this. Okay, so you can actually see it's easy. So what I want you to do is you state the formula. What I want you to do is what? You state the formula, you show the working. So the working, I think let's take advantage of this column. You just use these columns and get the answer. You double underline your answer so that it's very clear. The examiner can actually see your answer. You double underline your answer, you double underline your answer as we progress. Okay, so that's what I want you to do. And then I want you to then comment on the ratios. So you are expected to comment on the ratios. You are expected to comment. So that is that. For those who missed our last presentation, I want you to try and see the presentation that we made on this one. This one is another task that I gave you. So please, can you try this task on commenting on the profitability of the business? And these are the profitability ratios that we have given you. So I think that is that for today. I wish you all the best in your examination, but please remember that we need to work hard, we need to try hard, and at the end of the day, I know you can make it on this one. So I want you to complete that task, and when you're done with that task, then we move on to investors ratio. So watch out on the next video on investors ratios, and we discuss on how to comment on investors ratios. Bye bye for now. We wish you all the best in your exam.